The return of silver chaos. Could someone corner the market again? Could someone corner the silver market again? What if this isn't just a repeat of 1980, but the opening act of a global power struggle over one of the most underestimated metals on Earth? In today's exposé, we'll uncover what's really happening in the silver market, the price rally, the industrial squeeze, the manipulation risks, and how this white metal could become the next financial battlefield. Stay with me, because what you'll hear in the next few minutes might make you rethink everything you know about money. I'm Felix, and this is Mindful Money and Meals. Let's dive in. 1. What's going on with silver? Silver has always lived a double life. On one side, it's a precious metal used by investors to hedge against inflation and financial chaos. On the other, it's an industrial workhorse, powering solar panels, electric cars, medical devices, and the wiring inside every modern gadget. That dual identity is now colliding. In July 2025, silver hit $39.40 per ounce, the highest level since 2011. For context, silver hasn't seen those heights since the days of post-crisis stimulus and quantitative easing. 3 key forces are driving this surge. 1. A weakening US dollar, as the Federal Reserve hints at rate cuts to stabilize the economy. 2. A surge in industrial demand, especially from solar energy and EV production. 3. A global supply deficit, now entering its 5th consecutive year. So, the big question arises. With so much pressure building, could someone try to dominate the market the way the Hunt brothers did more than 4 decades ago? 2. What does cornering the market mean? When traders talk about cornering the market, they mean accumulating so much of a commodity that they effectively control supply, forcing everyone else to buy at their price. The most famous case happened in 1979 to 80, when 2 wealthy oil heirs, Nelson Bunker Hunt and William Herbert Hunt, began buying silver in massive quantities. They bought physical bullion, futures contracts, even borrowed to buy more. Prices exploded, from around $6 to nearly $50 per ounce. But then regulators changed the rules, margins increased, and panic selling began. The bubble burst. Prices collapsed 80%. The Hunts were ruined. That saga remains one of the most dramatic financial cautionary tales in history. But it also shows something deeper. When money loses credibility, people turn to real, tangible assets. And silver, more than gold, attracts the dreamers and the rebels who believe the system itself is broken. 3. Could it happen again in 2025? You might think we're protected now. Global markets are bigger, transparency is better, and regulators are smarter. But the same ingredients that fueled 1980 are reappearing, just in a modern, digital form. Here's the setup for a possible corner in 2025. First, the supply side is tightening fast. Mines in Mexico, Peru, and China, the world's top producers, are struggling with declining ore grades and environmental restrictions. Recycling isn't keeping up either. Second, industrial demand is exploding. Each new electric vehicle requires up to 2 ounces of silver in circuits and sensors. Every gigawatt of solar capacity uses nearly 20,000 ounces of silver paste. The global push toward net zero energy isn't slowing down, it's accelerating. Third, financial conditions are shifting. A weaker dollar and expectations of Fed rate cuts are pushing investors toward metals again. And with gold already expensive, silver looks like a cheap alternative. Add it up, and the setup looks disturbingly familiar. 4. The modern mechanics of a corner. If someone were trying to corner silver today, it wouldn't look like 1980. It would be stealthier, algorithmic, and global. They might start by quietly accumulating large physical reserves, maybe through private vaults or off-exchange deals. Then they'd use derivatives, futures, ETFs, and swaps to create paper exposure far beyond their real holdings. Because today's silver market trades in multiples of paper ounces versus physical metal, a powerful player could move prices without ever taking full delivery. The clues would show up subtly. Physical premiums rising in markets like India or China, delays in delivery from refiners and dealers, minus warehouse inventories on COMEX quietly shrinking. The gold-to-silver ratio narrowing fast, as we're seeing now, dropping from 105 to around 94 in 2025. Individually, these signs could be coincidence. Together, they whisper one word: accumulation. 5. Why it's harder, but still possible. Let's be clear, pulling off a corner today would be incredibly risky. Silver production is global. Futures markets are massive. Regulators can trace flows, and the Commodity Futures Trading Commission, CFTC, has cracked down on manipulation schemes before. But history tells us that regulation rarely stops greed, it just changes its disguise. Large financial institutions still hold concentrated positions in metals. Sovereign wealth funds have the money to absorb supply quietly. And in a world where central banks manipulate currencies daily, who's to say a government or state-backed fund wouldn't accumulate strategic silver reserves for industrial or geopolitical leverage? In other words, the Hunt brothers failed because they were visible. The next corner could be invisible, hidden in ETFs, supply chains, and national stockpiles. 6. The investor's dilemma. For ordinary investors, silver offers both opportunity and danger. Opportunities. The structural deficit suggests long-term price support. Industrial and monetary demand may push silver beyond $40 to $50. Physical silver can act as a hedge against monetary debasement and digital currency risks. Risks. A corner discovery could cause a violent crash if prices become artificially inflated. Industrial demand could fade in a global slowdown. As Goldman Sachs warns, silver is riskier than gold. It lacks central bank demand and is more volatile. In other words, silver's magic cuts both ways. It can double your wealth or melt your nerves. 7. Silver as a strategic asset. There's another layer most investors ignore: geopolitics. Silver isn't just an investment anymore. It's becoming a strategic resource. China dominates global solar manufacturing and quietly stockpiles silver for its energy transition. The US military uses silver in drones, radar, and satellite systems. Japan and South Korea rely on it for semiconductor fabrication. If global tensions rise, silver could join oil, gas, and rare earths as a weaponized commodity, something governments restrict, hoard, or subsidize. Imagine a world where the East controls solar supply chains and the West scrambles to secure silver for energy independence. Suddenly, this poor man's gold becomes a matter of national security. That's the world we're heading toward, and why silver's price isn't just about speculation anymore. It's about control. 8. Warning signs to watch. So how do we know if silver's rally is genuine or manipulated? Keep your eyes on 5 metrics. 1. Physical premiums. When spot silver is $39 but coins sell for $50, someone's hoarding. 2. Warehouse stocks. If COMEX inventories drop while prices rise, supply is tight. 3. Gold-silver ratio. If it collapses rapidly, big players are moving in. 4. Delivery delays. When mints and refiners can't fulfill orders, there's pressure in the system. 5. Options volatility. Spikes often precede sharp price reversals. A genuine rally is sustainable and broad-based. A manipulated one burns hot and ends fast. 9. Where do we go from here? The truth is, no one can fully corner silver today without attracting attention. But that doesn't mean manipulation doesn't exist. It just hides in new forms. Algorithmic trading, ETF flows, and bullion bank hedging can all distort the market in ways invisible to the average investor. Meanwhile, the long-term fundamentals, industrial demand, green transition, and monetary distrust remain powerfully bullish. Silver will likely continue its climb, perhaps testing $45 to $50 per ounce in late 2025 if global liquidity remains loose. But remember, the higher the climb, the sharper the potential fall. Invest in knowledge first, metal second. 10. Conclusion: the metal that mirrors the system. Silver is more than just a shiny asset. It's a mirror reflecting our era, an era of inflation, currency erosion, and technological revolution. Could someone corner the market again? Maybe not in the same way as the Hunt brothers, but manipulation, accumulation, and strategic hoarding are alive and well. The battlefield just moved from vaults and trading pits to servers and supply chains. If history teaches one thing, it's this: when the world loses faith in paper promises, it turns back to the tangible, to things that shine, that conduct, that endure. Silver may never replace gold, but in 2025, it has become something more. A symbol of the system's instability, and a warning of what happens when scarcity meets speculation. So, as always, stay aware, stay awake, and ask yourself, if silver truly reflects the truth about money, what does its rising price say about the world we live in? This is Felix, and you've been watching Mindful Money and Meals. If you found this exposé insightful, hit like, subscribe, and comment below. Do you think silver will break $50 per ounce this year? Stay sharp, stay sovereign. See you next time.